Welcome to On the Edge from Richmond, British Columbia. On the Edge is for educational purposes only and is not investment advice. It's been a while since we've done an update here. We've been working at Inc. on putting some of our themes that we've come across via insider filings and how they shape up with valuations and price momentum in the market. And we're trying to put those into some big idea concepts so our community members, subscribers can get an idea of what we're seeing and where we think some of the opportunities are. We kicked off September in our market report with a big idea called the medics. The medics basically we suggested were what Canadians could turn to for some relief from the poor Canadian economy. And medics stand for minerals, energy, dividends, and cannabis stocks. Now, just looking at the cannabis stocks, sort of it's a smaller group of the medics that was looking at stocks that hit our screens, basically that have good cash flow generation properties. This is quite different from sort of the mania we saw after Justin Trudeau first legalized cannabis in Canada, where there was a big flood into the big companies and ETFs. And this is much different. This is much more of a rifle shot approach where we're looking for stocks that hit our screens because they offer a relatively low correlation opportunity set compared to some of the big risks in the market regarding sort of what's going on with the Trump tariffs and some of the other large risks in the market, such as global conflicts. So the cannabis stocks are one area that are kind of out there on their own, at their own set of unique risks, but they're not related to some of the bigger risks we see in the market. The bigger opportunity set, though, starts at the M and the E and the D. M stands for metals and minerals, and this is an area that we've been talking about in these videos and in our reports all through 2025, because that's an area where Canada has a comparative advantage. And we talked about Canadian miners with operations in the US and in Canada in our last video, and that's a theme that's worked out pretty well. The US stock that we showed in the video, Faraday Copper, it's had a very nice run. It is up 89% as of October 31st. Now, the Canadian name that we talked about was Cisco Metals, and it's had not quite as good of a run, but a pretty good run nonetheless, almost 24%. We suggested at the time that Canadian stocks with US mining operations in the copper area could benefit from Trump tariff policy. Just shortly after the video, we got more information on the Trump tariff strategy. And as it turns out, actually, the Canadian miners are looking pretty good. Based on our understanding of what the Trump administration wants to do, US copper miners will have to set aside some of their production for the US refining business. It's not clear how that's going to impact the prices they receive. But the Canadian miners, it doesn't look like they're going to be impacted by tariffs. It looks like they'll still be able to send their ore into the US tariff-free. At least that's our understanding. That can always change with Trump administration. But they'll also get access to global pricing. So in fact, it could be that the Canadian miners with copper operations could still be relatively undervalued. Another area that we looked at in the medics is energy. This is a theme that we've been talking about since May, specifically long life Canadian assets. Strathcona Resources has been leading the charge, putting the spotlight on long life Canadian assets with its hostile bid for MEG Energy. Strathcona stock has been on a nice rally over the last 6 months, up about 34%. So it's a theme that we're going to continue to watch and continue to be on top of. And it's one we continue to like in the medics area. Based on the numbers that we've seen, it looks like US crude oil production growth is stalling, if not actually declining. It all depends on the numbers you look at. And you have to extract out the natural gas plant liquids from a lot of the reported numbers that are out there. You're just looking at crude production. U.S. production, it certainly isn't growing at the clip it was 3 or 4 years ago. And coming out of COVID, things have slowed down quite a bit. that could put Canadian producers in a nice spotlight as global investors start to look for predictable delivery of barrels to the marketplace. And I wrote about Canadian long life assets in the Globe and Mail at the end of October, so you can check out that article for some of the names we talked about there. Finally, we looked at dividend payers. This is an area of the market that has actually done pretty well as bond volatility has fallen over the last few months. So far, that theme is working out pretty well. We'll continue to look for those situations that pop up on the screen. We haven't seen a lot lately in Canada. Earlier in the year, we did look at Dexterra Group here in one of our videos. That stock has done very well, and it continues to do well in our rankings. And again, we will be looking for more dividend payers as the U.S. Central Bank lowers rates, although they're talking a little more hawkish game than they were previously. But I think the trend is still in one direction, and that's lower administered rates in the U.S. That should support dividend payers, probably on both sides of the border. Well, thanks for stopping by. If you're new to our community, check out CanadianInsider.com and sign up for a free intro account. If you need sophisticated tools and data downloads, check out inkresearch.com. Till next time, take care.